Paying tax is the right thing to do, but many of you probably would prefer to pay no tax, and many of you probably don't pay tax. The rich spend money trying to avoid doing so, sometimes legally and sometimes not. This is Tonight. I'm Bruce Whitfield. Tonight I will try to find out from Adrian Lackay, from SARS, and from Zweli Mabhoza, who's an independent tax expert, what is permissible and how SARS is combating tax evasion amongst the super rich. The latest tax stats came out. You've got a big fat book in front of you there, Adrian Lackay, in which you spell out who pays tax and how much tax is paid and how many people you believe, because you don't really know for a fact, are dodging the system altogether. Just give me the highlights.
Good evening, Bruce, and again, thank you for the opportunity. Currently in our tax system, as we speak, in the statistics we released, for 2013, about 3,337 individuals.
About 3,337, yes.
Submitted a tax return where they indicated their income to be more than 5 million for that year. So that would put many of them in a segment that we call high net worth individuals. And in terms of our definition, typically it would be an individual would earn 5 to 7 million a year, or whose personal wealth, either through families, trusts or other structures, would be more than 75 million. So that's a very specific segment of the tax base we started to look at in 2012. We've done some work to look at third-party data verification, what assets they own, what do they declare to SARS if they do submit tax returns, and so on. So we are we've made some progress in identifying individuals, engaging them, and not taking the approach that everyone is dodging taxes necessarily, but to engage them and make sure, are you complying, give you an opportunity to regularize your affairs, because many of these individuals do have complicated structures.
But that's the point. And you name the number 3,337. That doesn't keep South Africa's tax industry going. There have got to be lots more people who, through ducking, diving, dodging and being terribly clever in their affairs, have got money being earned by companies and by, I don't know if there's still CCs in existence, but certainly lots of money hidden in trusts, probably, that you're not even aware of.
Yeah, that's also some of the concerns the OECD, for example, would highlight, and if I can quote some, the use of trust to shield assets from tax liabilities, profits being expropriated to not tax havens, but countries with a lower tax rate.
None of this is necessarily illegal.
Illegal, yes.
None of it's necessarily illegal.
Correct.
So why does it bother you if it's not illegal?
Well, because people have access to resources to be able to afford these services, and they have access to other jurisdictions, there's always a higher element of risk that you may take money out and not declare it, and that you may be really sailing close to the wind in terms of your legal obligations. So our first approach was, let's identify the sample. Then we have a sample, let's identify it with data that is available through third parties, in other words, the deeds office.
How reliable is the deeds office, though? I mean, I've just been through a process with the deeds office, and my goodness me, I'm surprised they could find a file in that place. It's not electronic. A lot of the stuff's still manual. You are going to find a big struggle in finding reliable information.
Because it's part of the constraints that we have, and we must acknowledge it. We look at the e-nature system in terms of vehicle purchases and ownership.
How useful is that?
It's what we have to work with. So if there's constraints, we must acknowledge those. We get very good cooperation from financial services providers, where we can look at either assets held, bank accounts.
So the private sector is useful because it's digital, and the public sector, where you're reliant on the big assets, is not very helpful. How many people do you think are dodging tax?
Well, it's very difficult, Bruce, to come up with a number. I'll tell you why. Because I think that sometimes you've got people that are within the net. The people would be using, for example, the trust. But I mean, if someone is using a trust, at least if the trust is paying tax, at least that person is not completely outside the tax net. But you also have got other people that could be operating in the informal sector, and people who are not really literate and who have no clear understanding of what their obligations are in terms of paying tax. Take, for example, someone who decides to start a funeral parlor in rural areas, and that person in no time becomes a millionaire, and then that person does not have a clear understanding of what are the tax laws.
Or they may have a perfectly good understanding, they just choose not to exercise that understanding because they believe they can get away with it being in a deep rural area.
To make things even more complicated is also to find that in terms of the the infrastructure. In those rural areas, you don't even have SARS offices. So it makes things easier for them to say, look, maybe I should just continue with my business as usual. So it's very difficult to say exactly who is outside the tax net.
I mean, a lot of people overtake me on the highway because I drive an old chur. I watch those cars and I wonder where people are earning money from. Banks aren't that generous with their schemes to allow people to be spending, many people in excess, a lot more than 3,337 people spending in excess of £1 million on a car, Adrian. I mean, surely there's a fairly simple process of just, you know, use the gantries perhaps that are not being used for e-tolls at the moment, to do some kind of monitoring as to who's driving what, where and when.
Look, I mean, we have to look at the law and what the law allows before we can enact any such actions. A lot of examples that we find is people use companies to either take ownership of assets, including vehicles. So it's not necessarily their own, it's owned by the company or owned by the trust.
The classic example, and you know I'm going to bring up Dave King, because Dave King would, you know, I remember going to a court appearance once and somebody tried to take the watch off his arm and he said, this isn't my watch, it belongs to, I think it was Matlika Trading or Ben Nevis or whatever the case was, because it wasn't his, it belonged to a company. You can't take away this, the company lends this to me to wear. And it's that kind of clever structuring that can, I mean, and he tied you guys up in knots for 13 years.
But surely on something like that, Bruce, you should have something like fringe benefits tax that is going to kick in. If someone is using a company car, the tax is also still payable because that is a fringe benefit. If someone is, as you say,
you've got to be able to track it and trace it, and you've got to have the resource then. You've got to have another 10,000 people employed at SARS just to do that kind of work, surely.
Well, I really don't think that you need to do that because, I mean, I still believe that the majority of people, they want to comply with the tax law. And including the high net worth individuals, I think they do want to comply. There are a few things that maybe we need to talk about. For example, I think the state needs to find a way of actually, one, dealing with the red tape. Okay. The other thing, the other point which I believe, in my view, is also relevant is to say, look, besides the lifestyle audits, we need to look at how the government is spending money because who knows, maybe to some extent, some of these actions that we see, people, they are in actual fact protesting against the use of money. I'm not saying that it's right for people not to pay tax, and I hope that...
But already, the tax burden already, though, falls on individuals. What was the number? 35% of all taxes paid by individuals?
Personal income tax. Contribution to total revenue is 35%.
And the amount by companies is contracting, and then you've got the VAT receipts and import duties and everything else that comes along with it. But there's already a huge burden on individuals. Would you suggest that there is pushback by individuals to say, hold on a second, whether it be toll roads and Gandla, water supply, electricity supply, people just go, you know what? Come and fund me. A bit like the e-tolls rebellion that we've seen.
Look, some of the structures, they are motivated obviously by things like those. But I think the concern that people have, and I think SARS has got that, is to say, look, if you've got so many people that are outside the tax net, why should I pay so much? And then that is motivating for people to come with all the structures. We've got a loop structure where someone has got money in South Africa. They take that money out of the country and then it comes back to them in a form of a dividend, foreign dividend, or in a form of interest.
But it's not illegal.
It's not illegal, I agree with you, but I think, I mean, as someone who sits in the tax court, to some extent one looks at the spirit of the law. Although that is not always the case, because you only look at the spirit of the law if there's something vague in the legislation. So if there's nothing vague in the legislation, people, they do those things.
But the guys who milk the system, Adrian, are guys who go and they look at the letter of the law, they go and they draw a line and they go, I can go to that point. They go to that point and they don't stick a toe over it.
You see, Bruce, that's where we would increasingly rely on people like Zweli to give proper and right advice to their clients, to say, yes, there's a spirit of the law and there's a letter of the law. And what we've been able to do in South Africa over the last 20 years or so is to grow the tax base.
Absolutely. And it's been a very successful. You've got something like 15.7 million registered taxpayers, even though only 6.5 or so actually do pay PAYE.
And at some point during the period of under review, they were in formal employment. 6.7 of them need to submit a tax return, and many of them do so on time. Yeah. We're talking here about a specific segment of the tax base of very wealthy people who can choose how to structure their affairs or not. But the same compliance message must be extended to them. If you make your money here, if you want to be part of economic activity in South Africa, surely there must be some kind of responsibility. So if you engage in some kind of gamesmanship and you are being held to account at some point, you must own up for your actions. So for the last year, in the segment of people earning more than 7 million a year, we've done 80 audits. We are telling those people you need to account. We've recovered 106 million in outstanding tax debts from that segment. So the work is ongoing. We only started in
Of the
2012.
70, how many had gone too far?
There are currently 6 cases with the National Prosecuting Authority for criminal prosecution. So let's again just take a step back and say we've started in 2012. We are familiarizing ourselves with what kind of activities are happening here. We must create our own skills to understand very complex financial transactions, but it's an area we will continuously focus on, both the large business center of SARS and our audit division, and that work will continue.
But but you're also restricted in your ability to make these affairs public, because if you sort of have the ability to name and shame, there would be a far stronger compliance culture, wouldn't there?
That's always a constraint in our law. The onus is on the taxpayer to fully disclose, and what the law says, if you disclose your affairs to SARS truthfully and honestly, in turn we will protect you and give you taxpayer confidentiality.
Is the law too soft on that point, Zweli?
Look, the other complication, Bruce, that I think we need to talk about is that the way in which the legislation is drafted is that people, they take the advantage, as you rightfully pointed out, but in addition to that, people, they only submit their tax returns, say, a year after they've actually engaged in those returns, sorry, in those transactions. And then you may find that SARS, they'll pick that up when they conduct an audit, which could be happening after 2 or 3 years. And at that stage, it's too late. It was the same thing when we were talking about the introduction of with what people they were doing around Section 45. People, they did all those transactions around 2007, 2008, but they were picked up only around 2011.
Could the system, Adrian, be more efficient in terms of a speedier turnaround process? At the moment, the delay between filing a tax return in February and provisional tax final returns in January next year, it's quite a messy and cumbersome process, isn't it?
It is, and many people, for example, who are provisional taxpayers, their affairs are not simple. They don't earn a straightforward salary with one IRP 5. They may claim medical aid and mileage for the year, and that's it. Their affairs are complex.
So can't SARS tighten up on its processes and, in so doing, have a more compliant tax base?
Look, I think we've introduced service initiatives to make it more simpler. I mean, electronic filing is a far more
It's been a revolution, hasn't it?
We've reduced the number of pages that you must fill in and so on. But ultimately, I mean, tax, as Zweli would tell you, it will remain complex. And within our own capabilities, we will have to look at our service offerings.
We watch the space very closely. Sorry, Zweli. Adrian Lackay from SARS and Zweli Mabhoza, who's the independent tax expert who deals with high net worth individuals and gives them good, solid advice, no doubt. Thank you for watching. There'll be more tonight, tomorrow. Good night, goodbye, and pay your taxes. Good night.